This is Christopher Lewis from the dailyforex.com trading desk looking at the second quarter forecast video for major pairs, and the pair in front of you is the euro dollar, and this will without a doubt continue to be one of the focal pairs. It's the most liquid contract on the planet actually, but it will be one of the most visible and focal pairs that we see in the second quarter. With the recent, and I am recording this towards the end of February, with the recent resolution of the bailout funds for Greece, we have seen a rise in the euro against the dollar. However, this hardly solved the entire situation, and there are many other issues just waiting to happen and to creep up out of the eurozone. With this in mind, I expect plenty of problems trading this pair for any kind of consistency, and there's a real chance that what we will see is a bit of a rise during the beginning of the quarter, only to turn around and fall again. And the reason I draw the 140 and 138.50 area is this is basically one big resistance area, and I believe that 140 is probably about as far as we can possibly make it. It's a pretty significant move, and especially a significant move to turn around and pull back. But let's face it, this is the way the euro's been trading lately. As you can see, it's been very impulsive, very choppy, and I would expect more of that to continue, as the situation in Europe is probably going to take several years to fix itself. And every time that there's a new headline, there's always the potential for a 200-300 pip drop. There are other countries out there waiting to become problems. So to be honest, this is going to be a very difficult pair to trade, and quite frankly, by the end of the second quarter, I expect that we will have jumped around and basically gone nowhere. I would expect still to be somewhere right around the 132.50-ish area. The dollar Canadian dollar pair has been very choppy over the last month towards the end of February, but going into the second quarter, we would expect to see the way the oil prices are going, the Canadian dollar rise. However, it has not been doing that, and it is because of that I do not trust the Canadian dollar. The 99 level is support, and also all the way down to 97.50, especially when you look at lower time frames, you can see that there are several staggered support levels. With this in mind, I believe that the support should hold over time, and while we may have a spike in oil prices, quite frankly, the Canadian dollar just can't keep up with it. More than likely, we'll get a spike in oil, and then at one point or another, we will get that breaking point, like we had a couple years back when we hit $148 a barrel. From there, the meltdown continues, and the dollar will rise. It's because of this, I think we'll get a little bit of a soft patch in the beginning, but we will eventually rise by the end of Q2 in this pair, with 101 being significant resistance to the upside. If we can get above 101, then we can get some traction. I do expect a higher price in this pair, but probably after a little bit of an attempt to fall in the beginning of the quarter. The Australian dollar is kind of in its own world recently, and there are several different factors that could be playing into this. Number one, several central banks are flooding the world with liquidity, so that kind of drives the commodity markets higher. The Aussie, of course, does benefit from firmer commodity markets. With this in mind, I expect that we could get a pullback, and 108 is obviously a significant level. Recently we had a triangle, and it's a little clearer on the daily, but you can see basically where it was. That measured a potential move when it measured top to bottom to 112, and I think this is something that we will see towards the end of Q2, or at least at one point or another in Q2. Once 108 gives, 110 is almost assured, and then 110 gives, then there's really nothing to stop it from going to 112 at that point. There is potential for a pullback, but 104 looks extremely firm. So any weakness in this pair in the earlier part of the quarter will more than likely only turn out to be buying opportunities, as the RBA has recently suggested that they are quite comfortable with the higher interest rates that they see in the Australian dollar, and this should continue to put a little bit of a boost in this pair. The dollar franc at the time of recording has broken down below the 90 level, and although this is starting to look very bearish, it is presently at the 61.8, and I suspect that during the second quarter, even if we get a little bit of a meltdown or a little bit of a pullback in this pair, truth is it's very likely to have very limited downside. And the reason has nothing to do with this pair, but with the Euro Swiss pair. The Swiss National Bank has a floor in that pair at 1.20, and if that were to be violated, there would be intervention, and that would of course affect this pair as well. It would sell off the franc, pushing this pair higher. So while this pair may be a bit weak, I feel that it has limited downside, and those moves to the downside will be subtle. Again, if there's some kind of meltdown in this pair, you can rest assured that it's probably going on in the Euro Swiss, and that will trigger intervention. I think that the dollar being a safe haven against many of the world's currencies could produce some type of buying in this pair, as well as obviously you can't really buy the franc with any conviction. My suspicion is by the time that we get through Q2, we will be closer to 95 than we are 90. However, I think in general it will be a bit of a slow grind, and there will be some influence in this pair from the euro dollar as well, as it runs inverse. So we may see a little bit of a drop and then a pop, and much to do about nothing. And lastly, looking at the pound dollar, you can see that we've had a little bit of consolidation, basically centered around the 158 level, and as such, it does seem to be an area that the pair is very comfortable with. The pair does look like it's trying to find some type of support here, so I would suspect that this pair does have some legs to go, and if we can get past the 160, which is the next large psychological number, 165 is probably where the pair will eventually try to head. I don't expect a explosive move. Rather, I expect more of a firm kind of feel to this pair, but I don't expect it to actually take off. There are enough problems in the UK to think that this pair is going to be explosive. However, later in the year, I expect this pair to fall back down, perhaps even towards the end of the quarter. This pair will be heavily influenced by the European Union and its headlines because of the UK's close ties to that region. So as such, I expect a little firmer tone and then perhaps a pullback. At the end of the quarter, I think we will have found that this pair had risen a bit, but there was probably money to be made on both sides of it as we continue to chop back and forth with all things European, and connected to European problems.